All right, I think I'm all set. Okay, so how's everyone been? Uh, the weekend has just started. I hope the week was good. Any interesting stuff to share for the week before we get into the details of today's topic? And today's topic is specifically, I do want to dig deeper into my investing process. I think there are some questions around how do I go about stock, and I think I spent maybe a couple of minutes last week session to just quickly talk about at a very high level. So I put some thoughts around. I mean, I already know my investing process, but I never kind of formally put it together. So today I do want to formally take you through my investing process, and we will also culminate this with actually going through a particular stock, taking it through my selection process. So that will be the main topic for today's discussion. Unless you have something else you want to talk about, any you want to dive deeper into something else or some other stock or anything in general. But that's what I was thinking to do today, is take a step back and go back to basics and start with, okay, is I want to invest, and then how should I even get started from investing perspective, and then look at some of the process I follow, and we can build it together. Okay, so that was on my agenda. Okay, I see Samuel says bought $100 of Doge. Oh, you've been bitten by Elon Musk. the antics on Twitter looks like. Yeah, so Doge had it wind up some 20% or whatever after Elon Musk had changed the Twitter logo. The bird became a dog, basically. I don't know if oh, now the bird is back. So I think instead of a bird, there was a dog here, and now the bird is back. And after Elon changed it to the dog picture, I think Dogecoin ran up, what, 20% or something. All right. So I guess that's a lottery ticket, and yeah, you can play a lottery with this small amount of money. Sometimes it'll work, sometimes doesn't work. Overall, numbers suggest that lotteries generally doesn't work, but there's no harm in playing. I mean, everyone's way you work with money is different, so so it's all good. I didn't buy any Doge, or for that matter any crypto, etc. Still, crypto environment is really hostile in US, so we don't really know what exactly going to happen in terms of from regulation perspective. So I'm still waiting and watching on the crypto front. Be on the sideline, just checking what's happening outside of US. A lot of stuff is happening. Germany, they again moving forward with providing more regulatory clarity around bringing in tokenizations using blockchain. US completely different. So on SoFi charged 4%. They said 1.2%. Okay, SoFi is making 4% on Doge. So I guess, yeah, these pump and dumps are good for SoFi, Robinhoods, and all this stuff. All righty. Okay, so let's any other interesting stuff, any other interesting stock or anything? Looks like a lot of only interest was on the crypto side. Cool. Okay, so let's get into today's session then, and let's dive right. We'll start a little bit on the macro, and then we can jump on to our investing process and go and do a deep dive into a particular stock. All right, let's start with a thought first. Something that I came across last week was the active management of passive investments take time. Right? You must understand what securities you own, why you own them, and monitor their performance. Right? Uh, Passive investing has taken over the whole retail investors by storm. Ever since it was, I think, popularized by Vanguard. We started with the ETF, but over the last, I would say, 3-4 years, the similar kind of behavior of passive investment has also crept into doing individual stocks, right? So that passive investing behavior through the ETFs, because you did not have a single stock risk, probably was okay. But we are seeing that the similar behavior has now fallen into with a single stock, which may not be the best place to be in. So even if you are passively invested, it does need some active management. I have learned over a period of time, and hopefully you do. So if you have individual stocks, make sure you're able to monitor their performance. Make sure you understand why you own them, and we'll go through that process and later in the session anyway. But I thought this is something that we'll share. Passive doesn't mean uh, I'll just ignore it, buy it and just ignore it. Buy and hold also means buy and holding while watching. It's a intentional hold, and not that, yeah, I don't care about it. Okay, so let's talk about macro stuff. The major benchmarks were kind of lower because we saw some signs of slowing economy, right? After a long time, now looks like the bad news for economy is probably also now bad news for stock market. So three signs I think we saw for slowing down of economy. One was a labor market is becoming soft now, even though the unemployment is still 3.6%. But last week we had a JOLTS report out on Friday. It was a short week, so I hope you guys had something else planned for Friday. Market was closed on Friday, so we only had 4 trading days, so not too much action. So which would otherwise have happened on Friday when the JOLTS report came out, but we will probably see the action maybe next week. But from a job perspective, the ADP report showed increase of some jobs, but it was well below the expected increase, right? The expectation was 250,000, increase was only 145. Also, the wage growth has decelerated. So all these high interest rate has started to show up in our economy. Companies are not hiring at the same pace at which they were hiring, right? Also, the JOLTS report showed that the openings fell below 10 million for the first time in nearly 2 years. Still, I think it's 9.6 million or something. Still a lot of jobs available, but it's like over last 2 years, this was the least amount of job openings. But if the wage inflation is coming down or not coming down, if wage inflation is slowing, that may overall be good for total inflation, right? So we can take it in either way, saying, hey, that means if inflation cools down, that means the Fed will start to taper down on interest rates, and that will be good for market. Maybe, may not be. We'll see. But that does show that market is trying to cool down. Recession, I would say slow recession, or hard landing, slow landing, soft landing, but looks like some landing is starting to happen. Other thing we saw was around manufacturing and services activity that continues to fall. So we had ISM manufacturing index is now 46.3. Right? So below 50 means it's contracting. It was even below the expectations. And the services index was 51.2, which was also below expectations. So service is still growing, but not at the same pace at what it was expected to grow. Again, these are the couple of leading indicators for economic activity. So if we are seeing a slowdown in economic activity, there's a contraction in economic activity, or slow in growth, or that eventually means slower economic output, aka recession, right? So if you look at this chart in October 21, that's where almost market also peaked. We saw both the manufacturing, the services PMI was the highest. Now it's going down. Manufacturing peaked at around April of 2021, and then now it's like below 45 or close to 45. Third signal was on the housing sector, and this is a Case-Shiller index, which shows the gains in basically the appreciation in the housing segment. So the blue one shows the home price index year-on-year appreciation, and this so yellowish lines shows you the mortgage increase. So if we look at it overall year-over-year, as the Case-Shiller index shows that the home prices on average are now at 3.8%. It is still it's still gain, but the gains have come down drastically, right? From going from 15 to 20% year-over-year increase. Now we're looking at an increase in appreciation in the home prices of 3.8%, which really then upset all the equation of buying a home at 7% mortgage and for an appreciation, which currently we're looking at 3.8%. So no wonder the housing activity has really slowed down. And but I think when it comes to housing, its location matters the most. So while we are seeing a lot of slowdown in the coastal areas, I think there are still some area where the home prices have appreciated 7 to 8% as well. Right? But this is overall average. In Bay Area, the numbers are around 15 to 20% fall in home prices. There's no increase, but on an average 15 to 20% fall in home prices. There are some areas where I think in Florida, it's around 8% increase. There was one other couple of areas. I was listening to a podcast on Wall Street. I think it was Wall Street Journal yesterday. So there are a few areas where there have been increase, but looks like overall on the US side, 3.8%. And no surprises. If you go to Redfin, Zillow, key in your numbers and the monthly payment, that it will show up now at 7% vis-a-vis what it would have shown a year ago, is just, blows up my mind. It's almost double, right? So all the plans of buying a house or moving to a different house have changed. All the sellers are just the plan to stay put, right, at wherever you are, because if you have to buy a new house and take a new mortgage, it's going to be almost way above than what you're currently paying. So I think whatever the increase in the price that we are seeing is through, and it's because the inventory is still low. Yeah, so that's my reading. Of course, on the commercial side, the things are even worse, especially in Bay Area and office commercial space. I don't know what your reading is. Anyone in market to buy a house? No one. All right. Other thing which have been making a lot of news is around de-dollarization. Right? Suddenly, this things come over once in a week. You'll see suddenly a lot of discussion around on podcasts, on Twitters around. Okay, the dollar is the world is going to move away from dollar, right? And I'm amazed, and some of these topics will just suddenly start to blow up. So this week was one such, wherein a lot of talks around world is going to move away from US, of course, perpetrated by some of the crises, the banking crisis that we have seen, and now the fact that given the discussions around the recession may be setting in, the world is now having concerns around US for US economy and whether it will continue to be as strong as what it had been. So we're seeing a lot of talks around moving away from dollar. Jay said de-dollarization is Putin propaganda. If that is his propaganda, I think he's been pretty successful. There's a lot more talk about de-dollarization on the financial channels. But I think this is something that we should not ignore or not talk about, because that would be equivalent to just burying our head in sand and say, okay, there is no problem, right? It may not happen today, but we are seeing that many of, China used to be one of the biggest holders of US Treasury, and over past few years, they've already reduced. I think at peak they had $1.3 trillion. Now their US Treasury holding is back to where they were the start of I would say 2010 or 2011, right? So almost 13 years or whatever they were holding from US Treasury, they are back on there. So this, I think this was from Bloomberg, Bobby. But I think there is a hold on. Let me see if I can find that website where we have the US US Treasuries holding by foreign government. Okay, there we go. Okay, let's look at this one. This is from a Treasury government. It's from Department of Treasury itself, right? So the data is right here. So the biggest holder of US Treasuries is Japan. The next one is China. Now China has what? Now it's less than $900 billion, right? And then these. So overall, especially China has been trying to move away from US Treasuries, and there are a few other things I also read. And this is from, I think, Bloomberg's Business Week. I think that's, or it is from Barron's. I forgot, one of these magazines, right? There is a huge long article around the influence of China in the developing countries, right? So China has become a biggest sovereign lender to a lot of developing economies as a part of their Belt and Road initiatives, BRI initiatives. China had been building roads, transportation facilities, ports in a lot of these developing countries, right? A lot of countries in Africa, Pakistan, Afghanistan, and all the stuff. Now, when over the last couple of years, many of those countries have been in trouble, and China then is coming forward and using its $3.3 trillion of reserves and start to provide them assistance. So almost $240 billion has been funneled into Argentina, Nigeria, Pakistan. Right? China has deployed more than $185 billion. Out of $240 billion, $185 billion happened from 2016 to 2021. Right? And the way they are using is the almost same way what US is doing with its partners, is opening up those currency swap lines. So US also opened up the currency swap lines with 7 central banks, right? They did the same. We did the same thing in COVID, and we did the same thing when this banking crisis happened a few weeks ago, to provide dollars to some of those 7 central banks, which includes Bank of England, Canada, Switzerland, Japan, and I think there are a couple of more. So what China is doing is a similar stuff to provide lending, basically provide more funds to these developing countries. But China also has a little bit of sinister move, which also I read is around China's develop all those ports, etc. And if those developing countries are not able to pay back for the development of those ports, China is just going to take ownership of all those ports. So strategically, around the world, China has been putting its influence and basically own a posts in those trade routes, right? Could be conspiracy theory, could be, maybe a very long-term thinking from China. I think only time will tell. So, but over the past 2 decades, PBOC, the People Bank of China, has negotiated swap agreements with 40 countries. It's a start, but a long way to go. Jay, the link in the Buffett's graph for 25 years. China's goal to lend and take over natural resources when they, exactly, yeah. So I also read the similar thing somewhere. Take natural resources, take over the ports, take over those trading routes. Dave says China is foolish lending money because a lot of countries are not paying back. Maybe that is what the plan is, Dave. They will lend it, and then when you can't pay back, we'll take over your house. Who knows? This may all be a part of a much larger plan, right? You lose this particular battle to win a bigger war. So a few other points that I saw around China's advances in global economy. China's state-owned energy trading firm CNOOC created history by selling liquid LNG in yuan. And they didn't sell it to any developing country. They sold in yuan to France Total Energy. So this is France. This trade in yuan, which so far always happened in US dollar, but last week, actually France Total Energy were okay to trade in yuan for sake of LNG. China is pushing countries in Middle East, North Africa to settle trades in yuan. We know this is already happening. I think Saudis also agreed to do some level of a trade with China yuan. This is already happening. Many countries which participate in BRI, I think we already spoke about. Last month, Iraqi central bank announced they will settle trade in yuan. Not that we care much about it. In Jan, Saudi foreign minister told that Saudi is open to trade in currency other than dollars, which one of them will be yuan. I think this is something that we do care about. The reason that dollar had become world's reserve currency was Saudi. We kind of forced Saudi to sell their oil only in dollars. So that's where the term petrodollar come from. In in exchange for the protection that US military will provide to Saudi Arabia. And if that pact or agreement between Saudi and US had not happened decades ago, the dollar would not have been the reserve currency. The only reason why the dollar, I think one of the big reason why the dollar became the reserve currency of the world is the Saudi refused to sell oil in anything else but dollar. So oil was the lifeline for the industrialized economy. And during the whole when 1970s, 1980s, when the world needed oil, only way for them to get oil from Saudi was to pay them in dollars. So that's where the whole petrodollar started from. But now we start to see small amount of cracks in that relationship. And especially the relationship between Saudis and the US have not been that friendly, right? Especially after the new administration has taken over office. So, but now they already started to trade oil in more currencies, as not exclusively in dollars. Okay, so I think, yeah, there was an answer. They may price oil trade in China in yuan. Israel also added yuan and Canadian dollars to its oil pricing. Now, Brazil has more yuan than euro in its reserves. Now they have 5% reserves as yuan. It was 0% in 2018. Again, so things not gonna fall off on one, in one single swoop, right? It's not that, hey, dollar has suddenly disappeared. So these things take decades to materialize, but it always starts with the baby steps. Any big change, geopolitical change, always start with the baby steps. And these are some of the baby steps that we're seeing. Now the yuan is used to settle only 2.5% of global trade, right? Which we can ignore, saying, come on, US dollars is used to settle around 60% of the overall global trade, right? But yuan had come down from 0 to 2.5 in last 3-4 years, whereas US has gone down from almost 80% to 60 or 65 over past few decades. So de-dollarization, is it happening? In a very, I would say, very trickle, drop by drop. So you can't drain the Olympic pool suddenly, but it has started with drop by drop, let me put it that way. So, and especially after what we did, after our act to block Russia's holding of US treasuries, almost $600+ billion, world started to think about, gosh, we need to de-risk ourselves, we need to diversify. Even diversification happens at a central bank's level also, because they're not really sure. If you're not friendly to US, we may choose not to honor our debt. Come on. Yeah, I borrowed some money from you, but because you did X, I'm not going to pay back. That's exactly what we did with Russia. So things have started to change, but even, okay, so now it's dollar makes, almost 60%. Right now, this is Q4 2022. This is, I think, from Reuters. Still, majority is in dollar. And then next one, the more dominant currency is euro, 20.5. Sterling pound, 4.6. Pound used to be the global reserve currency. and now it's relegated to 4.6. Yen is 5.5, and then it's Chinese renminbi. Okay, so I didn't even realize. So China is what? Fifth, even though it is 2.7%, but we look at it is fifth largest currency to settle global trades. So a lot of stuff around, a lot of discussion, I would say, around the whole de-dollarization concept. The other one, which we don't see it here, which I know many of Bitcoin maximums want to see, is another slice over here for Bitcoin. Maybe we hope for a world where we'll have multiple reserve currencies or multiple reserve assets, right? In which the trades could be settled. Unfortunately, we don't settle the trades in gold anymore because we can't transfer gold over wires. If that would have been possible, we could settle that as well. But yeah, you can move Bitcoin over wires. Ramesh said, Dave, China is, I think, yeah, we talked about that. Doing it this way, you can take over the countries without invading or war. US dollar was backed by gold reserve too. Yeah, those were the days when government could not have printed it out of thin air, right? But when we have to finance the wars, and the politicians don't want to go the hard way of raising money to finance the war by either cutting down the expenses or by raising the taxes, right? The only third available option for them is to, okay, let's print money. So that's why, you know, Nixon had to move away from gold. So surprisingly, most of the people that I talk to have no idea around that US dollar is not backed by anything but promise of US government, right? It's not backed by gold. There is no real asset backing this this currency, which is, I guess, most of the currencies in the world are not just a fiat currency. Is backed only because the government says, hey, this is worth what it is. Jay asked, what are actionable steps conclusion from all these de-dollarization articles? Are they pushing Bitcoin or gold, etc.? Gold we saw is shining, right? Bitcoin, I don't know. Bitcoin is a lot of regulatory concerns, right? So what will happen to Bitcoin? And these de-dollarization concerns are not coming only from, let's say, the crypto enthusiast, even the normal traditional finance, right? TradFi folks are also talking about cracks in the strength of US dollar, right? However small the crack may be, but yeah, it is a crack. So gold, we saw gold blew past $2,000 mark again after, I guess, 2 years, after a gap of 2 years. And silver was also shining. So I just took a chart of a GLD. What a nice run, especially the last week, this whole big green candle. That's pretty nice. Why gold? A lot of central banks bought a lot of gold in 2022. Right? After a lot of gap. I think I have a chart for that as well. So why central banks were doing that? Again, diversification from what they want to hold in their reserves. Yeah. Mostly coming from emerging economies. Right? Oops, double copy paste. So this is a chart of central banks buying gold. That's been the highest since 1950. I mean, the chart had only data till 1950. That should say something about why is central bank across the world bought so much of a gold in 2022. especially most especially after you US cut down Russia from SWIFT. US seized Russia's holding of US Treasury, basically won't be honoring it. So I'm sure all other emerging economies wanted to lean away or reduce some dependency, however small may be, from US government and hold something else that also has a value and is valued across the world, right? And right now, it's been, the gold has been that store of value for thousands of years. So central banks bought the highest amount of a gold in 2022. Most of that comes from Turkey, China, Egypt, Qatar. But 2/3 of the gold wasn't reported publicly. So there may be more than this, than what World Gold Council has information about. Banks that have not regularly published are include those of China and Russia. So there was one news, I think last year, we also saw Russia started buying gold. So again, mostly around the central banks, they've been stockpiling gold. Does it point to de-dollarization? Maybe. Or if it is only Russia and China, then we know, but it looks like some of the other smaller countries are also starting to buy gold. Overall 2022 demand of the gold matched the record of 2011. So not just the central bank, but way back in 2011. So overall looks like a little more demand for gold, for other stuff also. So another one table, which are the areas where we saw more gold? So 2021 versus 2022, jewelry was down, tech was down. Investment perspective, year-over-year change is 10%. So bars and coin up 2%, ETF is down, central banks and other institutions up 152%. So mostly coming from central banks and I say other institutions. So is gold going to see its, is going to back see its moment? What after 10 years? I think isn't it still down from where it was 10 years ago? Yeah, so this is, I think, 2020. It hit the highest around 2020. Before that, it was 2011, right? So this was during COVID instead of just one spike. So we just come back to where we were in 2011, 2010, right? I'm not a commodity one. I don't track what's happening in gold or what the miners are doing and whatnot. But I do hold GLD in my portfolio. I don't have I don't own physical gold from an investment perspective. Too much to liquidate. Rob says not enough gold anyway. Yeah, but the only thing around the gold is if the price becomes higher, there will be a lot more money that will get in extracting the gold, because then it will become profitable to extract more gold. So when I say not enough, I don't know if, Rob, you are talking about the overall gold deposits that can be extracted profitably now, or the overall gold deposits put all together. maybe today it is not profitable to extract the gold, which is deep under earth. But if the gold prices go higher, then it could also lead to more spending in extraction of that gold. Okay, not to back world currency. Dave, de-dollarization means dollar down, which is good for tech companies for the time being. I'm not sure if it, again, I don't know if we can we can find out the impact of or the impact of de-dollarization is big enough in a short term to bring to lower the demand for dollar right now. This is a very small change, but let's say tomorrow there's a big world crisis coming. I'm sure everyone will still run back to dollar, because still 60% of the trade is still happening in dollar. Right? So the de-dollarization impact, my assumption is we will see in like say 30, 40 years. Right? This is just a very small start. But until then, the world will still run back to dollar, and in terms of crisis. Same thing with energy, right? Fossil fuel energy, we don't want it. We eventually want all transition to cleaner energy, green energy, solar, wind, water. But in a short term, if we need energy, we'll have to go back to fossil fuel. There is no other there is no other choice. We saw that in 2022, and still seeing that in 2023. So I think the same is the case. Probably similar analogy with dollar. World will still run back to dollar in a short term. So I'm not going to make any decisions around buying on a tech company because there is a de-dollarization that's been talked about. Power to tax large economy world is backing. A day from your weekly chart looks like GLD is ready to fall, or because the 50-day moved below 100-day. Is that we can if we look at daily chart, what does it show? So to me, this does look overextended, just based on, and if I look at some of the things that I look for when I look for where the stocks, whether it is overextended in a short term or not. CCI above this line, yeah, but RSI is below my point of 75. Stochastic above this line. So 2 indicators out of 4 shows me that it is overvalued, but I don't have a confirmation for all 4 right now. So that confirmation probably happened here. Right? It's above this Bollinger Band, above CCI, above RSI line, or above stochastic. That was technically full confirmation. Work sometimes, may not work every time. But these are some of the things that I look at when I look at for a short term. Again, I'm not a big, as you guys know, I'm not a big follower of technical charts on day-to-day basis. But if I were to do let's say if I were to do a trade on some stock, I want to sell a call, and I see if this is, or let's say if I were to sell a put, I'll just wait right now, right? So it doesn't mean that it may fall. It might just meander around this price point. So de-dollarization has been slowly happening, but look at DXY 20-year chart. Dollar is actually stronger, not weaker. The whole de-dollarization task, most of the discussions we started to see now only after the let's go to maps. So Dixie. Yeah, so from 2000 to 2023, I mean, it's been up and down. It's just back to where it was. It started in 2000. Am I looking something wrong? Yes, it's where it was this is ending 2000, and this is 2023. So it's been all over places. There have been area where you have a crisis, 2000, 2001, dollar becomes strong, came back down, or a COVID crisis, world runs back to dollar at around, and then, I don't know, banking crisis, 2023. But anyway, I think it's a big ship. The big ship takes a lot of time to sink, and that doesn't mean that it's gonna sink. If we become more prudent in managing our expenses, but then we'll probably continue for another few decades. But long term, if US continues to print dollars out of thin air to fund our deficit, to fund our expenses, I mean, how long can we fool the world? Maybe prior to this, world did not have any viable alternative. Euro tried to become one, but could not. But who knows? Could yuan become? Who knows? I mean, I don't think so, because there's a lot of capital convertibility issues on yuan. If you hold yuan, in China, you can't just freely convert it to any other currency. Countries that are dealing in yuan, because they are being forced to deal with, right? And moment they find any other better way, they'll move out. Possible, but only thing is, was just sharing some data point that does point out to that dollar is not the only remaining currency. There are a few more currencies that are now starting to pop up in global trade. Dollar is still the dominant one. I'm doing really well in energy and crude oil futures. Started accumulating few months back when it was low. Nice. Oh, energy was the best holdings for me in 2022. I still hold energy as a, I don't know what portion of my portfolio it is, but I guess it is low. But yeah, I hold big SPY, so already get exposure to energy. Now looking for something next to get in. Also, so Dave, you're looking to trade on a sector by sector basis, looks like. If there's a nuclear missile used sometime this year, would you buy SVP QQQ when it happens? Nuclear missile, I think after the stocks have fallen down, yes, then I'll probably look at buying SPY. But during all these crises, while the crisis is happening in wake of a nuclear missile launch, I'll be holding cash. I'm not gonna get into the market at that point of a time. We don't know what's gonna go. At that point of a time, what am I holding in my portfolio would be least of my worries anyway. All right, okay, so I think we read through that. Stock indices. Overall market was so. I think what 1.3% overall SPY was up for the week. But again, market has been pretty range bound. I think what I hear pundits talking about is SPY has to break above 415 for market to resume the rally, get back into bull rally. So far, I think it touched 11, 11, 411, 412. No, where did it close? SPY 409. So if you look at this, it's been pretty range bound since the end of the. Okay, this is the start of the year. Yeah, so I think this is mid-December. It's gone back where it was, let's say mid-December, and mostly range bound. Last year was day trading crude oil futures and completely screwed. Ukraine war broke out. Nuclear war happens, everything on a tank, no matter what. That is true. Everyone want their money. I mean, may not be end of world. I would buy some party if that happens. Yeah, when that happens, dollar will rise, markets will fall. And then I guess if I'm still alive, that will be the best time to go back into the markets and start buying some good companies. Market still historically very expensive. Let's look at. I think that is right. Not very expensive, but I think it is still expensive. What's SPY's PE? It's not. It's nowhere cheap. Let me put it. Okay. PE ratio current. Okay, current S&P PE ratio is a 19.17, which is still on the expensive side, right? On an average, the normal average is between 12 to 16, right? But again, as we have seen, these averages also, those average ranges also tend to go up decade by decade, right? So a few, let's say 50 years ago, I don't think I have that handy right now, but in one of our previous sessions, we look at in like 1950s and 60s, the average of SPY was, the average range was X. Then 90s, 70s to 80s, it became X plus something. Then 90s and 2000, it became X plus plus, right? So right now, 19.69 is expensive from historical perspective. I would be more comfortable, if it is closer to, let's say, 17, still more than what the average is, but we probably may be willing to pay more for the risk now than what we were willing to pay, let's say, 50 years ago. But it's not cheap. If you're thinking that the overall market is cheap right now, it is not. Looking to start building longer term portfolio, 1 to 3 years. You can Malay recover 50%. Yeah, I mean, Mali, I'll still hold for next 20 years. So I don't know what 1 to 3 years. Yeah, it's back up 50%. I'm happy about it. Mali is up 50%. Nvidia is up what, 90%. Some of the stocks that I hold in portfolio, many of them are up more than, I gets 20-30%. But who cares? At least I don't care, especially for these real long-term holds. Yeah, it's fine. It will go back. It may go back. Not, I shouldn't say it will, but it may go back. It already gave some of the gains from 13.29 to 12.24. So yeah, YTD, it's this is what we did. Was it last week? We added this. Oh, at least I added this label last week using Chat GPTs. YTD change 50.71%. So yeah, I'm happy about it, but not ecstatic, and nor was it depressed when it was around 600, 700. I think I bought some at 750, not too much. Again, we don't have to rush in, or we don't have to just throw in the towel. Rob, assume Fed will soon start raising, but may not lower rates for, will stop raising, but may not lower rates for longer time. So that's what Fed has been saying, that they have no intention to lower the rates. Market, on the other hand, is predicting that, Jerome Powell, I don't believe you. You will start to reduce the rates. So market had what I think 2 weeks ago we had a chart where I think for next 2 cycles, 2 FOMC meeting, market had predicted that Fed will keep the rate stable or maybe 25 basis points. And I think starting July or August, market is pricing in that the Fed will start to cut the rates. Though we don't see Jerome Powell or any of the Fed person coming back and saying that they are in any mood to cut the rates, but they are data dependent. And market is predicting that, guys, without cutting the rates, this whole contraction that we are seeing in the economy, the lending that the lending spigot that has been now closed by the banks is going to do the work what Fed wants increase of interest rate to do. Is going to break the back of economy already, and then so that we don't go too deep into recession. Again, I don't think Fed would want us to get into the depression era. They do want to break the inflation, but not put country in depression. And market saying, guys, Mr. Powell, we will be in such a bad situation that by the end of a year, in Q3, you will start to increase the rate. You start to decrease the rates. What will happen? Only time will tell. So, but market has already started pricing in reduction in rates. Things could change week to week basis depending on what other Fed governor come and talks to in the market. Dave, ChatGPT integration task, or was it just asking ChatGPT? No, so maybe you were not there last week. So last week actually we also did a live. I had experimented with ChatGPT to help me in adding some more labels and some more scan capabilities in TOS. So I just asked ChatGPT to give me a thing script that I could use. If I had done myself, I've written some for some of the other stuff 2-3 years ago. But if I had to do myself, it would have taken me an hour. So ChatGPT gave it in, like, we finished everything in 15-20 minutes. One of them was this YTD change. I think other one was around golden cross, right? If there's a golden cross happened in last 50 days or whatever the time limit was, it will actually show up as a label here. And then we use it to create our watch list, so that then I can filter with all the stocks in which the golden cross happened in last 50 years. So that whole thing script, I got it from ChatGPT. That was my fun with ChatGPT. Right. Yeah, I mean, I wanted to, I had some time, so I wanted to use and do my own experiments. So I thought, why not to, rather than asking ChatGPT to write any random Python code, let me try to use it with something which I can actually put to use immediately. So I first asked ChatGPT, can you help me with think or swim script? Can you help me with a TOS script? And it's yeah, I can help you with that. It's a customized scripting language for all that. Okay, let's get going, guys. So we work with ChatGPT. It's like a developer sitting by my side. And then we went back and forth. I'm like, this didn't work. I said, sorry, apologies. Here's the code that has been fixed. So all right, let me make sure that if anyone who wants to talk, you should be able to unmute yourself. Yeah, you're good. So that's it. Maybe if I find some more time, maybe we'll spend a little more, do some more experimentation with ChatGPT. All right. The other thing that caught my eye was the strength in the healthcare sector. So last week, two sectors were pretty strong. Especially one was healthcare. Look at a healthcare XLV. This is 1 year, 1 day. Okay. Oh, this already is 1 year, 1 day. So we saw a huge uptick in the healthcare ETF, XLV. One of the reasons seems to be, I mean, the two big ones are J&J and Eli Lilly, I guess. The other one was XLU. Again, both healthcare and utilities are so-called defensive sectors, wherein if you want to move into, you don't know what's going to happen. The growth stocks will get hammered, and you'll move towards a little bit of a defensive stocks. So both the healthcare as well as the XLU had some pretty nice run up for the last 2 weeks. Yeah, look at UNH. That is, I think, United Health. Yeah, I don't. So unfortunately, I don't follow many of these individual stocks in the healthcare space. Only individual stock I have is J&J, which is in 401k. So I'll just let it there. Otherwise, I just trade on XLV. But yeah, UNH had some big, yeah, from 462 to all the way 512. I don't know. I think is one of the reason is because CMS, the Center for Medicare and Medicaid Services, I think that came back and they allowed the increase in pricing, which market did not expect. So that would be good for many of these healthcare companies. I guess that was probably one of the reasons. But I'm not complaining. But good to see healthcare back. And overall world market, even though the US was so ended up a little bit in green, China was really bad. China and Taiwan, all the big ones were didn't go good. Oil was interesting. OPEC, oil has been what XLE is what I have, right? Yeah. I think after this whole OPEC plus decided to cut down oil production, we saw a jump in a lot of these oil companies. But if you really look at it, oil has been whole sideways. Sometimes the waves are too deep or too high, as we saw over here, from 70 all the way to 94, and then back to 75. So for me, my trade in oil have been playing both sides. So hold XLE stock and then kind of sell a put spread and a call in a single trade. I think last 3-4 times I've been doing this for last 3-4 months, and so far it's been working out. Now the next one is for April expiration. Sorry, not April, the May expiration. Last week I closed April expiration for profit because I had around 83 short put and I think 75 long put and 95 short call. So after this jump, that worked out well. Closed it, and then I have put in another one for May. So that's been my play on oil. Again, has been trending up and down. If it goes down, yeah, I'll buy a little more and just hold it. Oil companies tend to pay high dividends and low PE for now. So if you look at oil companies, have been one of if you look from a traditional valuation metric, some of the oil companies are like should be the top ones, right? Huge cash flow generators, good dividend payers, also companies like Exxon and Chevron doing like $75 billion worth of buybacks. So from that perspective, I think all these oil companies have been doing really great. Cool. All right. So what did I buy? I picked some EEM because that was the share that I saw was down. It was in the red, and I generally try to pick something which is in red. So I found, okay, let me add a little bit to my EEM, which is emerging market positions. Right? What else? Okay, another chart I saw is around the equity risk premium. And that, for all the right reasons, have been coming down. So equity risk premium is basically what's to take a risk of buying equity shares. What's the premium that you are getting? Now, because of increase in interest rates, the premium that you could expect for taking the risk on equity has really shrunk. So if equities are returning, let's say 10% on average, now your premium over the risk-free rate, which is, let's say 5%, will be 5. On average, S&P's return is around 8% or whatever. And that's the reason why we are seeing, the lot of money is, ever since the interest rate has started to increase, we're seeing market not performing because there is not much premium to take the same level of risk of what it used to be in equities. Right? This also talks about, is pretty evident. This was interesting that from our Fed hiking cycle, the current rate, whatever 4.5%, is not the highest one. I mean, we had close to 4% in 2004, but the pace at which the rate has increased has been the fastest. And I think that's what is killing all of us, is businesses that can't figure out now how to adjust with this reality of such a huge increase in the interest rates. Is Brazil still considered as emerging markets? EEM still considered Brazil as emerging. I mean, it is EEM holdings by country. Let me just find that out. So I don't do any individual emerging markets. I mean, let me put it the other way. I don't think that's entirely correct. I do hold shares, let's say, in some Chinese companies, so I do have exposure. But beyond that, beyond some of the other individuals, I just pick up EEM. So there are a couple of ways to do it. Either you can pick up, oops, where did the EEM go? Either you can pick up EEM, which has got, get rid of it. Where is country exposure? There we go. Okay, yeah, either you pick EEM, which has got exposure, I think Hong Kong, if you consider that, same as China. So overall, Chinese exposure around 30%, Taiwan 15%, India 13%, Brazil is 5%. Or we could look at individual country-specific ETFs also. So for China, it could be FXI. For India, it could be INDA. I don't have FXI, I have INDA. For Brazil, it could be EWZ. EWZ Mexico, Brazil. Keep forgetting. Oh, this is Brazil. Then Japan is not emerging. What else? Taiwan, I don't even know. Is there anything specific to Taiwan? Taiwan. ETF. Taiwan country ETF. Okay. Oh, there's another one which is called XCEM. So I was exploring this because I do hold, some of these Chinese Baba and Baidu on my portfolio. I was also trying to explore emerging markets sans China. So there were two things that I came across yesterday. One is XCEM. There was another one similar to that, but none of them are good when it comes to options perspective. So I'm like, okay, fine. I'll just stick with EEM. Oh, EWT is Taiwan. I don't know, I've never done separately. I think in my previous life, I have traded EWZ separately. I've traded Mexico one, but I've never done Taiwan. Volume is decent. 2 million volume. Bid ask a little bit wider, but not the worst ones. So the option volume is very less. That's the reason. I mean, if you have to go further beyond, let's say ATM, the bid ask spread is really very wide. Yeah. So haven't looked into EEM much, so it's a safe play. So EEM is always an insurance policy against capital flying out of US. It hasn't over the last 20 years, it hasn't outperformed US, right? So it's been US has been the best market to invest in over the past 20 years. But this is an insurance policy. We want to diversify outside of US into emerging markets, because emerging markets are supposed to be the next up and coming growth markets for the future decades. Then you should pick up EEM. For me, it's all from a perspective of diversification. If a US dollar goes down, so generally the relation will be, if the dollar will go down, you will see EEM performing better. But if dollar stays strong, then EEM won't be able to do. Right. I think the last one before we jump onto the investing process is Lyft. So stats, Lyft lost 90% of its value since its IPO. So have to be really, really careful around running behind these high-flying IPOs. Even though, I mean, Uber is still down. Uber, I think, IPO'd at what, 45? Where is Uber right now? From 32, 33, 31. So Uber is also down 30% from its IPO. But I think Lyft is just cornering. There's nothing much left in the Lyft. It really needs some lift. So the reason it came onto my radar was, so they have replaced two of their top executives, the CEO and the president, and brought in someone else. Someone else who they brought in doesn't really may not have the right credentials, but who knows? So if you have a Lyft, we want to think about what do you want to do with this company. Now it's like 9.43. Rob says, good story about Uber and Lyft in Bloomberg. Okay, I'll search for it. So my play of this always been Uber, just because they have more than one business, and also they are in multi-country, right? Lyft is just US and only riders, which kind of got them killed during COVID. And Uber Eat continued to help Uber not just survive, but thrive. I mean, Uber Eats became much, even a bigger portion of the revenue in last 1 year or so. And then Uber also diversified into others, and now they're trying to sell off their freight plan. But anyway, so that's the reason why I never liked Lyft is, hey, if I were to do that, I'll rather do the same exposure through Uber. So I still hold Uber in my portfolio. Uber falling more, Lyft falling more behind Uber as per story. Yeah, I mean, there is zero brand loyalty in this business, right? Every rider will have two apps, both Lyft and Uber, whichever is willing to take me to my destination at a cheaper price, I'll go with that. So you just can't really compete on price. You have to start to diversify. That's the reason why I picked Uber against Lyft. Lyft just didn't want to diversify. Dave, I sold BA 200 puts. I was told despite slow economy, all the airlines are booked beyond capacity. I was looking into AAL, LEV, UL, jets. Haven't decided which is better. I have Lyft calls, but not sure. Yeah, I mean, you want to play for a smaller duration, take some exposure through calls or etc. That's fine. I'm not too positive about long-term outlook of Lyft as a business. Someone will come and buy it and can extract some value out of it, maybe. But I generally don't invest based on acquisition theory. It is a theory. Some people do that and it worked out great. Not my theory. So, all right. Last one is I never thought we'll see Canadian bank in trouble. Canadian banks are generally thought to be more reserved in taking risks. But so this was really surprised that the biggest shot in the banking industry right now, anywhere in the world, is not in Switzerland or Silicon Valley, but it's the TD Bank of Canada. There's $3.7 billion short positions in Canada. I don't know how the short positions have been. I don't think I read the whole details. It might be through CDS, credit default swaps, or is it through just pure short positions? That I don't know. But it's like almost $3.7 billion of short positions on TD Bank. Who could have thought? We all been looking at Credit Suisse of the world and other so-called notorious banks who have been notorious for taking huge risks, HSBCs, of course, all the banks in US. But here we have a bank right in our neighborhood up north, which is basically have the most short positions against it. From an overall percent perspective, I think this is very, so it's not, that's, we can expect a short squeeze on this because from a percent perspective, it's very less. But from the dollar value perspective, it is the biggest short of all the financial institutions across the world, right? It's ahead of France's BNP Paribas, ahead of Bank of America Corp. And the reason why they are going so short in this is around their properties. Housing sector. I thought I had that. Okay, looks I didn't bring it in. So it's around the slowdown in the housing sector. Canadian housing markets have even been hotter than what we see here, specifically in areas like Montreal, Vancouver, Toronto, and many of so many of the banks have exposure to housing, and if the housing slowdown comes in, these banks will have a lot of, I would say, negative consequences, and that's one reason why a lot of short position exist on TD Bank. Okay. And TD Bank also hold stake in Charles Schwab's Corp, which is technically it's already underwater. There, so and we are seeing a lot of weakness in Charles Schwab's anyway in US market. So that's the reason why TD Bank is the most short position. I don't know. Does it even trade in US exchange? Does anyone know TD Bank? Oh, it does. TD. wow, what was this? 75 to 60. Okay. We don't know when the short positions were open, probably already closed or not. Okay, so it does trade in US markets. So we want to short, we have what, TD. Do your own due diligence, guys. I don't know, but I was just surprised to know that it's a Canadian bank that has got the biggest short positions. Okay, alrighty. So let's dive into our last section for today, is the overall investing process. Then I'll run through maybe one stock that will pick to go through this full investing process.
Vivek,
Yeah, go ahead.
what Kramer said about NEO, he said no position, but he said until the Chinese government supports.
Sorry, I lost you. Until the Chinese government supports.
Until the Chinese government supports its industries. So you're in good shape, Vivek.
Oh yeah, I mean, yeah. So NEO, I don't have to worry about NEO because that's where my cost basis is negative. But yeah, my position size is fine. It's not too big size in my portfolio. If it works out, it'll be great. I think so far. Anyway, for me, I have it's just a house money I'm playing with, and any company in China has to have the blessings of Chinese government, whether it's NEO or whether even it is Tesla, right? It doesn't really matter. Well, the only reason I had NEO was around their battery as a service, and they were able to extract some of the subsidies that were available because they brought down the car pricing by not charging for the basically taking the whole pricing capex out of that battery and use that as an opex by providing battery as a service, right? Well, we'll see. So far I'm still happy and holding my NEO positions, and NEO has seen, I guess, all type of moons. So at some point of a time it was at $2, I guess in March 2020. Yeah, around $2. At some point of time it was $70, and now it is back to $9. But yeah, I'll hold it. Alrighty. Coming back to this, our investing process. So what do we want to go through today is all of the general steps, which probably you would have seen. Again, I'm not a financial advisor, but if you work with a financial advisor, they'll take you through the same steps. Understand your goals, understand your risk profile, allocate, select a stock. What I do want to focus on a lot more is stock selection. Then how do you maintain your marriage with the stock? And then finally, also in the divorce, where it may be a time or what it could be a reason where I may want to now, okay, I'm done with it. I'll be ready to divorce the stock, right? So that's the overall process. We'll go through it. But before that, I want to focus on some things which generally I don't see a lot of people talk about, is pre-investing. So I see a question from Bobby. So let me read that. If Schwab or TD Ameritrade goes down, will the brokerage accounts in the firm protected by FDIC? So brokerage accounts, so if you're holding cash in Schwab or TD Ameritrade, that is protected by FDIC. If you're all your securities, those are protected by SIPC. So you'll still have, your, I mean, so from that perspective, yes, these are protected. Okay, so let's talk about and build this process together. right? I'm not gonna come and let's say just talk about 2 or 3 points. That may not be the only ones. So we can build all this together. So pre-investing, right? Before even think about investing. So like some of you ask me, how do I build my investing? So before that, before I think about investing, there is something pre-investing that we have to do. And I am a big believer in saying, guys, before you even talk about investing, make sure your personal finance side is fixed, right? That make sure you are, before you start to invest for future, all your personal finance side of a house, which means, especially for me, it's a, if you have any credit card debt, right? That's taken care of. If you have any personal loan, you have taken care of that, or any medical loan, you have taken care of that before we start to think, okay, I need to invest in the stock market. Auto loan, fine, as long as it's not too big part of your monthly paycheck. You can still carry your auto loan and run your investment side by side. Mortgage, fine. Right. I would hate to put it in the stock market, but continue to carry a credit card debt and paying 26% on credit card. Right. That's what I do. So first, make sure we on the personal side, those things are fixed. Those things have been taken care of. What else? You just tell me. I take a look at credit card, personal loans, retire all these things. Well, let me suppose retire these. Your student loan or a portion of student loans. Create your emergency fund, right? Before we put anything in the market. So again, this needs to be readily accessible, available. CDs is perfectly fine way to access these. Now, from emergency fund perspective, anywhere between 6 to 12 months, right? That depends on what kind of work you do. This is tied over, maybe you're out of work, you're out of job, right? Maybe you and your spouse, both people are out of job. So have to have that personal emergency fund available before you put anything in the market. Right? So that's one pre-investing prep. If we are not ready with this, let's not even talk about whether I should invest in Facebook or whether I should invest in NEO, right? We are not even ready to have that discussion. Second thing is, I'll say, prep for behavior and mental strength. Is your behavior, whole investing is a lot more about right behavior or mental or a gut strength than picking the right tickers. You may pick up the right ticker, but if we haven't been able to ride through the whole volatility that every ticker will go through, then finding a great stock is of no value because we didn't ride all the gains, right? We were not strong enough to work through it. So I focus a lot more on mental behavior and the strength, mental strength, and our behavior when dealing with investments. Different people have different needs. You need to understand what game you are playing with your money, and don't have to follow if someone else is playing a different game. You also have to understand, if you're, let's say, watching Jim Cramer, you come here every Saturday, you need to understand what kind of a game I'm playing. What game am I in? If you are a day trader, right, then your and my game is going to be very different. Then you can't emulate me, you can't follow me. And I can't do that either. If we are talking about some particular stock and it's a great pick, it's just cross the golden cross, that just happened, There's a lot of chatter in the market. We just saw a huge block of call options being bought on it. It might work for you, won't work for me, because I am not behaviorally, I am not tuned to be a day trader or what it needs to be a day trader. Similarly, for you, it may not work out if you're not of the same, playing the same game that I am playing. So that's why I'm very clear and say, what's my holding period? Minimum 5 years. Minimum 5 years. I would wish I'd never have to sell a stock. So I'm playing a very different game. But if you are playing a game for your holding period is 3 months, then we won't be talking in the same language. And then the stock that I say I really want to buy it, because when I go through my investing checklist, it's a good buy for me, that you may lose money in that stock in 3 months. So understand that. For me, I used to hate people buying lotteries. I don't hate them anymore because they are playing a different game. It's just that we have, every person's situation is different, your upbringing is different, your needs are different. So I used to think that those who buy because I don't buy lotteries, I used to think those who buy lotteries don't know what they're doing. I was so wrong. Now I realize I was so wrong. They are just playing a different game than what I am used to playing. So it doesn't mean that what they are doing is wrong in their situation. That may be the only thing that can give them hope for a better future. Because that's what most of the lottery, if you look at, the statistics suggest the most lottery buyers are the ones who can't even afford a $400 emergency account. But they will go and invest in lottery because $2 a dollar can't give them, can't help them in their future, can't put food on table, can't buy sneakers for their kids, can't help them to go for an excursion. But the hope that that $1 or $2 can give, that if I buy a lottery and if it works, that's going to be great. So their situation is different. Now I don't hate them or look condescendingly on them, saying, hey, you don't know, you're just wasting money in lottery. No, their game is different. Similarly, people do day trade, people do swing trade. All I need to understand, and you need to understand when you're talking to someone, which game they are playing. Right? Before you start asking, oh, is this stock great? Should I buy this stock or not? I might say, buy this stock. I'll go and buy the stock. I'm playing a 10-year game. And if you are playing a 2 weeks game, the result's going to be completely different, right? You could feel great about it. I do not feel great about it, or it could be the other way around. That's one thing around behavior. Understand, be very clear what game you want to play. I mean, it's not a game, but metamorphically, which is why are you in the stock market? Second thing, now depending on why are you in the stock market, what game you're playing the stock market, then what Jim Cramer is saying could be an investing advice, could be a noise. What I hear in CNBC is daily fluctuation on a stock. It could be a zero impactful information for someone who is looking at 10 years. But it could be a great insight and actionable investing knowledge for someone who is looking at 1 week. So consume the resources or act on the resources based on your understanding of what game you are playing. Okay. That's the second point in a behavior. When you're consuming an information, always tie it to usage of that information to enhance your game, not someone else's game, not Jim Cramer's game. I know Dave is a day trader. Right? If I'm buying something, I'm not buying I don't want to buy that to enhance Dave's game, which is he's a day trader. He's playing a different game, right? So I don't know how to pick up or something which he may be interested in. That information I'll use, but I'll see, does this fit my game or not? If it doesn't fit my game, great. It'll work great for Dave, not for me. Third is lifestyle creep. Right? This is very difficult, easier said than done, is avoiding lifestyle creep and try to, what do you call, catching up with Joneses, which everyone, including me, I'm guilty of doing that, but something that have to work on continuously. Fourth is staying strong during the downturns. 2008, 2009, then we got into 2008, 15, 2018, 2020, 2020 COVID, and then 2022. These are the times which will test your, I would say, not your IQ, but your EQ. And if we are not gone through this pre-prep of being behaviorally strong in whatever game we are deciding to play, then we will find ourselves either stressed out or out of the market when this downturn happens. And over long period, these downturns are the perfect opportunities to make extraordinary levels of gains, but only if we are able to participate in that. So these are the, I would say, pre-investing stuff you need to be ready with before we even talk about how which tickers, right? So far we haven't even talked about any tickers. We don't have to. If we are not ready with this, then talking about any ticker is very, I would say, a momentary, ephemeral discussion we're going to have. You're not going to stay with that. We'll be talking in a different language. I don't know what you're doing. And that is why generally when someone asks me what's the right one, I can't tell you which is the right stock for you, because you and I, we are playing completely different game. But we can talk about the stocks. It's that's why I focus on stocks, business, etc. Then you can decide whether you want to play for a yearly game, weekly game, swing trade, 6 months game, 3 months game, or 5-year, 10-year. Okay. All right. So now we are done with the pre-investing. Sorry, I had to spend some time because I don't see generally people talking about pre-investing. Everyone will just jump into how do I find great stocks, right? But that's of no use if we are not done these things. All right, so now, okay, let me address some questions. Then I'll jump into, now we are ready to talk about investing. All good so far? Find this useful? I know this is not the typical investing discussion wherein people talk about stock, or let's look at some indicators, or let's look at some valuation metrics. We will look at it, but I thought before we even go there, some of the things I just want to get out right in front, which is probably more important, are these pre-investing steps that we have to be ready with. All right, back to, let me see some messages. Dave, hoard gold and silver medals, dig a hole and store that. Someone in my trading group is actually doing that. Not just bearish, became an actual bear. Yeah, get into hibernation, get your pot of gold, right? And into the cave where no one can steal it from you. Game, not losing money, minimize risk. And so that, I think that's what everyone is here for. Bobby said, do you suggest paying off mortgage before investing? I think this is a very interesting question. I myself has gone back and forth on this one, Bobby. multiple times. So, and what I found is there is no right answer to it. And let me give you an example, my own example, right? So what gives me peace of mind is I don't have to worry about paying my mortgage when I'm in retirement. I just don't want the headache of having a mortgage when I retire. And if that means I have to start paying off additional principal every year so that I am done with my house mortgage before I retire, I have done that. I have done that earlier until as of last year. Now, the reason is I have paid off small portion of my additional principal every year. And if I get some bonus, I'll set aside something for my mortgage. Doesn't mean that I'm not putting money for investment. I am putting investing 401k or a taxable brokerage account. So at some point of time, if you think only from the numbers perspective, it might look stupid, right? Hey, I have I started with 3.75% and I think 4.25% mortgage, and overall S&P on an average give 8%. So if I just look at the financial number as a calculator, it's a stupid decision. But at that point, it's more about my sort of when I retire, I don't want to have that mortgage hanging over my head. And that's why I did it. And yeah, I am investing on the markets on the side anyway. Now, the other reason was if I flip the situation around and I'll think, am I willing to go to the bank and get a loan at 4% and put that in a market? Ignore that I have a house mortgage. Am I willing to go to the bank and say, give me a loan at 4.25% because I want to invest in the market? I honestly couldn't say that, yes, I will do that. But if I couldn't say yes to that, then that's exactly what I'm doing if I am investing in the stock market when I have a 4.25% mortgage, right? I guess you get the point. So I had been paying a little bit of it until as of last year, because then I said, now I have a zero risk by buying treasuries, because now my mortgage, of course, after refinancing and all that, now my mortgage is 1.99%. So I'm like, okay, I'm not going to pay anymore, because now all the extra money that I would have paid or I had a plan to pay, there is a zero risk of that for me to buy US treasuries and just hold it. So now I have stopped paying anything extra on my mortgage. So that's my style. You could be different, but just mentally or behaviorally, my idea is once I retire, I don't want any mortgage, plain and simple. So that was a plan I was working on. Dave says, no, invest small. Dave, emotion is number one character needed to invest or trade. Absolutely. And I learned it very late. I always thought you would need to be a good technical chartist to understand indicators. So I tried that. With my lifestyle didn't work. And then I thought, oh, okay, now you need to understand more fundamentals. You need to find a great stock. Maybe you need to follow a good fund managers. So I've done that. I had looked at on Guru Focus who's doing what is Stanley Druckenmiller doing, what is Warren Buffett doing, what are some of the other family offices, or look at the 13F filings. Then I realized, no, I think first I need to understand who am I. So it takes time to go through that whole process of introspection on who am I. The way you hold Melly is amazing. I have cut my losses and moved on. And here's the story. I also sold Melly because that time I had not done so much of introspection, which I did during COVID. So it is in 2019, 2018. So I bought my first buy of Melee was at $350. And I think it was 3 months, 6 months, maybe 7 months down the line, it was already 425, maybe 6 months or maybe 3 months. It wasn't even at 6 months, I guess. I bought 350 and it was 425. And I sold a call on Melee at 550 or something, or maybe 600, something like that, which was 25% higher than where the stock was. Right. And I'm like, wow, how high can it go? It is already up 25%. I'm giving myself another room for 25% for it to go higher. And, I will sell it. And unfortunately, after the earnings result, it actually went up more than that. It was like 550 or $600. I'm like, what am I supposed to do? So I sold some of that Melee. And I regret that. Even today I still regret it, because that point of a time, I was also of the opinion, which I've now toned down, is never hurts to take profits. Right? This is great. But then I realized, why did I sell only if this? I should have actually sold a call spread. Ever since, after that was the only trade where I had a naked call on Melee, which was backed by the stocks that I had. But I didn't sell all the stocks. I took some loss, held some stocks, and I'm great that I held on to some portion of my stocks and started rebuilding the position. And then I learned a lesson. With Melee, I'm gonna sell a call spread, not a calls anymore. But yeah, everyone has to pay their price. You have to find out, you have to learn and understand yourself, which I then understand myself on as an investor. But that's my story with Melee. And so I think I had 100 shares, and then I sold 50, and then I started building again. So a 5-10 year plan, how to invest in Biden Green Energy and CHIPS Act. So for CHIPS Act, unless you're looking at individual stocks, the SMH is the one. Individual stocks, my play is ASML, TSM. Again, the place for picks and shovels. I have a little bit on Intel because it's strategically important. AMD, Qualcomm. Again, there are many. Now, I'm not done individual study on any of these. So I don't know whether Qualcomm is better than AMD or not. I know Qualcomm have had some issues with Apple, which now they have reconciled. But Apple is also trying to build their own chips. So if that's the case, I would rather go with an ETF and use options to basically reduce the cost basis. All right, continuing on. Yeah, SMH is the ETF. Let's now talk about investing. Right. Now we are from, okay, let me just put a couple of points. So we talked about mental behavior, etc. Now let's talk about investing. So when we start talking about investing, and my question is, investing for what? What's your end goal is? You may have more than one. It's perfectly okay to have a different goals. Are you investing it for a retirement? Why are you in this market? Or are you investing for, let's say, kids or your own college expenses, which is coming up? Or are you investing it because you want to buy a car or you want to go on a vacation? What is the goal that you want to take out of this investing? Because it is important to understand this, because this will tell you when do you want to enjoy the fruits of this labor. If you're looking for retirement, and okay, I'll just put it, I don't know, everyone is of a different age group, but let's say if you're looking for retirement, I only talk about myself because I know myself the best. If I'm looking at retirement, I'm looking at minimum, let's say 10, 15 years of age, right? But if I'm looking for a college expenses for my kid, I'm looking for next 4 years. Or do I want to looking for a car or a vacation? Then it's maybe in a year. So it's important for us to understand what my goal is. But that will tell me how long do I have before this tree has to give me fruits. Right? I'm planting a seed right now. And if I want a fruit in a year, or if I want in 4 years, or if I want in 20 years, the seed that I have to plant right now has to be different. If I want in a year or in 4 years, I can't be planting, let's say, walnut. I think walnut takes what, 20 years? Right? So that's why it is important to know what's the goal that we are trying to achieve out of this. And it is perfectly okay to have multiple goals. Right? Hey, I have something which I need to buy a car for, which is coming out in a year. I have to save for my kids' college, or I want to go to college. I want to go back to college. I want to go to college in next 4 years. And then, yes, I want to save for retirement. And maybe I want to save for my house down payment. Right? Another big one. Based on that, then we can decide on, okay, what are the areas, or how do I need to go and build my portfolio? If I'm looking for a car on a vacation in, let's say, 6 months, all the investing that I'm going to do is CDs or treasuries. So now you're saying we're trying to correlate with our needs and the goals to our investable instruments. Right? Because if I'm looking for next 6 months, I have no idea where the market will go. But if I'm looking for this one, I could pick up SPY, which is, hey, I'm looking for next 4 years. I could pick up some SPY, or let's say, let me not give some stocks, combination of stocks or bonds or CDs. House, if you're looking for house down payment, depending on how far you're trying to build. Now, personally, when I was trying to build house down payment, my old one was in CDs, because I'm like, I can't afford to. Capital preservation was my focus, not the growth, because I need to pay to build up a corpus to pay down for the house. Only thing I did from an investing perspective was to move the money from my 0.01% of Wells Fargo to Ally Bank, which was that time, a little more up and coming online only bank, which was giving me at least 0.5%. But my goal at that point of a time was capital preservation, nothing else. Now, depending on, because I wanted to buy it in next 12 to 18 months. Now, depending on how far your goal is, the mix will be different. Retirement is all right now. Again, I probably won't get into so much details, but retirement is all on stock market. Now, as we get closer to retirement, we'll start to change the mix of what I hold in my portfolio, right? I also have, let's say, GBTC in my retirement right now, which is Grayscale Bitcoin Trust. But if I was retiring, let's say 5 years now, I probably wouldn't have GBTC. GBTC is like 15-year gameplay. So understand what the purpose of your investment is. Now, assuming you've figured all these things out, then you move over to your, I think, not directly on allocation. I think before that, we should talk about risk profile. And I think it is important before I jump on to allocation. So now you figured this out. Now, let's say you and I, we both have the same goal. You want to save for kids or your own college. I want to do the same. but your risk profile, my risk profile could be different. So you need to understand what causes you to lose sleep, and I need to do the same stuff. Kids, college, out 4 years. If you are completely risk averse, you just don't want any risk on kids' education, you might be more willing to put in CDs, treasuries, because for you, you're zero risk taker. You want to just preserve the capital that you have. You don't want any risk on the kids' college. Whereas if I am a moderate risk taker, I might pick up some corporate bonds, or some your high dividend paying stocks. So for us, it is important to understand what makes my stomach churn, right? What causes me to lose sleep in the night? Because I'm of the firm opinion, no investment, stock, bonds, Bitcoin, dividend, treasuries, CDs, your pot of gold in your backyard, your a gold bar in your bank locker, whatever investment, no investment is worth losing sleep. So understands what cause your gut to wrench, what cause butterflies in your stomach. What if the market goes down 10%? How will you feel? And it's difficult exercise unless you've gone through it. But ask these questions yourself. Determine, are you a low risk taker, moderate risk taker, or high risk taker? Because based on that, your instrument will vary even for the same goal. You and I, we both have the same goals. We are same for college, but the instrument that you will pick will be different. What I will pick will be different. No single medicine work for all. So now we know we got our personal finance side all stuff done. And the reason why this is so important is when the times like March 2020 comes, 2022 comes, wherein the market is not returning anything. And if you haven't taken care of these will start to cause you to lose sleep. Because gosh, market is down 10%. My retirement portfolio or my taxable brokerage portfolio is down 20%, 30%, and now I have to pay credit card bill which is coming due. I will be forced to sell the shares, and when the market is down 30%, when actually it may be a better time to buy those shares. But if these thing is taken care of, you won't have to, you will not be forced to take the decisions. The worst time in the market is when you are forced to do something. So this stuff is all cleaned up. This builds the foundation. Your foundation is strong. And if this is weak, then doesn't really matter what we build on top of it, right? Our 10th floor may be the greatest penthouse, but if my foundation is weak, that penthouse can come crumbling down if I get one margin call, right? Okay, so then we prepped ourselves. We understand ourselves rather than understanding the market. I now know, you now know who you are. Then I find out, okay, what am I investing for? Now you know what the game you're playing. Understand what you're investing for. What's your goal? What's your risk profile? Let's say, assume your risk profile is medium to high risk. Because if you're a completely low risk profile, then I wouldn't even say that you should allocate into individual stocks. Now, let's say you are a medium to high risk profile taker, and you are okay with that because you don't have any, KD loans, you don't have any huge credit card debts, you don't have any big, other kind of those loan shark debts. And you're ready now, you're ready to invest in the market. And mentally and behaviorally, you can go through those ups and downs in the market because now you figured out what the game you're playing. You're playing 5-year, 10-year, etc. And then based on if it is a 20-year game, then one day market crashes 5%, doesn't really bother you much. The screens, the red in the screen is not a good sight to look at, but it doesn't cause you to lose sleep. Now let's assume you're a 5 to moderate risk taker. Then we jump on to, okay, stock. Now, how do I select a stock, or what kind of stocks do I want to own in my portfolio? To own. So far, so good. Give us some feedback. Any questions? All okay? Is this helpful? Now I'm getting into stocks and now figure out, okay, how are we going to go through the stock? But I thought some of the earlier process, in my opinion, is way more important. And that is why I just went through that. Okay. All right. I did not see any feedback. I'm like, I talked for 10 minutes non-stop, and I wasn't just talking to myself. Okay, so let's say what stocks do I want to own? The way I build my portfolio is I'll have something which will be, I want to call it as core part of my portfolio, right? Core part. Something that gives stability to my portfolio. Right? Then I will have some growth stocks. Then I have some rocket ships. Right? Then on the other side, I will, so when it comes, okay, we already discussed in terms of the stocks versus bonds that depend on all your risk profiles. So now I'm only going to talk about stocks. Now, when it comes to the core part of the stock, which I want to, I want to own companies with good fundamentals. Now, why fundamentals matter for me is because the game that I'm playing is really long-term game. I would say never-ending game. Right? So for me, it is important to look at fundamentals first. I don't want to go and screen for where the 50-day moving average has just crossed 200-day moving average. Right? There will be time to do it, not right now. There'll be an appropriate time for those decisions. But when I'm trying to build my portfolio, that I'm trying to look at company for good fundamentals, that won't be the point. So let's take a case, and then I'll say, some other things that I might look at is these, right? First of all, I want to look at a medium plus market cap, right? When I'm looking at a core part. Market cap may be greater than $25 billion. Good gross margin, about 40%. And again, you could pick, let's say 35%. Don't pick 20% and don't pick 90%, because then you'll eliminate most of the companies. Pick somewhere, anything above 30%, and I would say below 60%, 70%. Right? Good net profit margin. I want companies to be profitable, to make some money. Will also grow earnings in future because, hey, history, right? It's been great company. But if I'm starting to build my position today, I need to know whether it will grow in future or not. And eventually, it's good return on investment, right? Company raise money through equity and debt. How well are they using that money? How much return are they able to generate on that money? And lastly is, companies could get great returns, but they could be over leveraged. And then the leverage will cut both ways. So I do want to know return on investment, but your growth should not be fueled by over leverage. So your debt to equity should be less than 3. I don't want to be less than 1, because then I will miss out on many great companies who have raised debt because the debt was so cheap, that was the right thing to do, that they have a debt to equity ratio of higher than 1. They have more debt and less equity. But then I don't want to pick up the companies who have taken so much of a burden of debt that their interest payment itself is going to consume all the cash, all the profits that they're generating. So my sweet spot is I want to pick up the companies whose debt to equity ratio is less than 3. So now we are talking, now we are building our filters / screeners to figure out the companies, right? So I did that. I already have a screener built up on FinViz. And again, I go to FinViz, I'll go to my screener and say, okay, presets my strong fundamentals. Okay, $10 billion company instead of 25. You can tweak whatever. Net profit margin over 20%, debt to equity is less than 3, return on investment more than 15, gross margin over 40. I also want to check it's optionable or not. Again, this is not the, even if it is not optionable, I could still pick up. But to start with, I'll check if it is optionable or not. Right? EPS growth over 10%. It'll give me some stocks. Okay, these are the ones which I want to add to my ticker. I could potentially look at these companies. These are not the ones which I'm going to go and pick up right away. But these could be the potential for this. So if you want FinViz, you can build this your own screener using this. Right? These are the potentials. Now, by the way, I didn't do this exercise for last two or 18 months because I wasn't looking to add any more ticker in my portfolio. Right. So, but now if I were to add to, I'm looking for a new ticker to add to my portfolio, this is the step I'll go through. And then say, okay, Apple, I already own Apple. As you guys know, Apple is probably after the SPY, I think that's my second biggest position or the third biggest position. Airbnb, I already own it. Adobe, I don't own it. ANET, I don't own it. ASML, I own it, blah, blah, blah. I'll go through the list and see which one do I want to add onto my in my portfolio. And that decision could be driven from, whether I currently own it or not, how big is it is it already my position and all that stuff, right? Let's say we figured out that I want to do ASML. Okay. Then I'll run through the process of how do I go about then analyzing that ASML. So far, so good. So we identify what portion of a portfolio do you want to build? What should be the criteria that you could pick for building that portion of portfolio? Now, if you want to build, let's say, growth stocks portfolio, in that case, so this was what, 10 billion. So that case, my my criteria could be different. I might be looking at, let's say, anything greater than $2 billion. The companies are just turning up. Or maybe anything greater than just $1 billion. Companies just come out to the public market. Their gross margins should be 50% high. But more important is, more important for me, more than margin, is the revenue growth. Revenue growth, I didn't figure it in while selecting my core part. But I do want to talk about, when I'm talking about growth stocks, I do want to look at revenue growth of at least 25%. Or, let's say 30%. Net profit margin goes out of equation right now. Because I'm looking at a growth stocks, so they may not be making any money right now, but these are the ones which I think will make money in future. So ROI won't be there. So it will be a different one. Now, let's say if I'm looking at some rocket ships for the future, then I might look at a company that is serving huge total addressable market Okay. The market that it currently serves may be small, but the overall addressable market is huge. It might be a company which is, only or initial player in the new market or new geography, let me put it that way. Or it is operating in a very niche market, so almost no competition. Or it has, and generally where it falls, is in, let's say, biotech, or it has got a huge patent, which could give it a tremendous amount of a growth in future. But these are hugely high risk, high reward. And these are what satisfy my sugar need for lottery tickets. So now when I'm trying to build my portfolio, I'll say, okay, guys, I want at least 40 to 60% of my portfolio in this. I want 30 to 40% in this, and then maybe 0 to 10% in this, or maybe put, let's say, max 15%, never more than that, because this all could go down to 0. So when building this, I need to know could go to 0, real possibility, before these companies prove themselves. Right? So then you have to position, size the part of your portfolios accordingly. Now, I might have come with a great company, and these companies generally have no revenue or very less revenue to begin with, but they're selling a huge TAM. They got a look. One of the companies is like, which is the one that we are reviewing in 2020. That's the X-ray company, NanoX, right? And I've always been saying this could go down to 0, but if it is successful in securing all their FDA approvals, it's going to be huge, because the overall TAM, total addressable market, is enormous. And there is no other company that is trying to solve this problem the way they are trying to solve the problem, by making X-ray dirt cheap. And this, but it's a high risk, high reward. They don't even have a product in the market. They don't even build their product. But as long as that and a combination of other such high rocket ships is less than 15%, it goes down to 0, still okay. Yeah, ouch, it hurt, but I'm still can continue to play the game, right? It hasn't fractured or broken my leg yet. Yeah, I got a bruise, I got a scratch, I fell down. I'll put a band-aid around it and get back in the field to play. But if this, and this is what we've seen, a lot of people learned lesson in 2020. We had a lot of these great companies coming out to the IPO and jumped onto it, but forgot what the allocation size should be. If you load it, make this as your 25, 30, 40% of our portfolio. And then if you're blaming the market, saying, oh, stock market is rigged, these things don't work, it's all manipulated, I'm sorry, I think it's nothing but us to be blamed. So I do hold, and I think that's what I always say, 25% of the 25% of the companies that I hold in my portfolio could have a real chance of going to 0. Right? Not all of them are these rocket ships, but some of them are in the growth companies also. They do have products, they do have the stuff. But if those goes down, still be okay. All right. So now, let's say we've done all that. We want to now invest. We're looking at a 4-part, and we want to pick up ASML. So let's jump at ASML. And how do I pick up ASML? First thing I'll do is to go and go to that company's website and maybe pick up their look at their find their documentation around annual reports, or if there is an investor presentation, you would rather pick that up. So I'll finish this ASML will continue next week.